Let's talk about Hims & Hers stock today. In the past month, the stock has fallen by 15%. The telehealth provider has been a growth machine in recent years, but investors have been dumping the stock after a brief partnership with Ozempic maker Novo Nordisk came to an abrupt end recently. What does it mean for the stock, and is this a good time to invest in Hims & Hers? On Monday, June 23rd, shares of Hims & Hers fell by an incredible 35% from $64 the previous day to less than $42. That was just in a single day. The big movement was due to news that Novo Nordisk would no longer be collaborating with Hims & Hers Health. And it wasn't just that the partnership was ending, it was how it ended that sparked the sell-off. The two companies announced in April that they would be working together to make it easy for people to access Novo's obesity treatment Wegovy through Hims & Hers. The big controversy, however, has to do with compounded drugs, which Hims & Hers offers its customers. Compounded drugs are effectively knockoffs and copies of FDA-approved drugs. The problem is the compounded versions themselves aren't approved, and Novo Nordisk has found that they are often made from foreign suppliers in China, and they are made with illicit active pharmaceutical ingredients. For consumers, that can give them access to a cheaper version of a drug that's otherwise not available. And while there is a shortage, it is permissible for companies to make compounded drugs and have them available. Earlier this year, however, the FDA declared that Wegovy and Ozempic, which is Novo's diabetes drugs that people have been using for weight loss, are no longer in shortage. So technically, compounded drugs shouldn't be allowed anymore for those instances. Hims & Hers, however, says that it makes personalized compounded versions, which may be medically necessary for patients, whatever that means. Hims & Hers platform is big on personalized drugs for specific patient needs. Novo Nordisk, however, has referred to Hims & Hers marketing this as deceptive. By the sounds of things, Novo may have assumed that by partnering with Hims, the telehealth company would provide customers with its real FDA-approved drugs and no longer offer compounded versions of Wegovy or Ozempic. But that obviously hasn't been the case. Compounded drugs will obviously be much cheaper, especially if they're sourced from China. When Hims & Hers announced access to GLP-1 injections last year, which would have been compounded drugs, it said prices would start as low as $199 per month. But through the Novo Nordisk collaboration, the price was starting at $590 per month. Novo wasn't happy with Hims & Hers still offering compounded drugs since agreeing to partner with it, saying that the company failed to adhere to the law which prohibits mass sales of compounded drugs. For Novo, the problem is simple. Compounded drug sales mean people aren't buying their real FDA-approved versions. It's a loss of sales for the company, especially when there isn't a shortage of the drugs. By partnering with Hims, it probably hoped and expected to reach a wider customer base, and they quickly find out that the partnership wasn't going to work as well as they expected it to, especially with Hims still offering compounded drugs. There's also a more troubling problem to consider as well. If Hims is relying on these knockoff drugs and providing them to customers, there could be side effects which may be more severe than what patients might otherwise experience when actually taking the real Wegovy. Since compounded drugs are not FDA approved, they haven't gone through the same extensive clinical trials in demonstrating their safety. And so if someone experiences a bad side effect while using one of these compounded drugs, they might believe that was due to Wegovy perhaps not being all that safe or effective, as opposed to Hims sourcing it from a questionable supplier. This potentially hurts the brand, which is why Novo and other drug makers try to stop compounded drugs from being available, when there isn't a shortage especially. Plus, it can also, of course, hurt the person relying on these knockoff drugs, and that could open up Hims & Hers to liability issues down the road, should something happen. Hence the controversy around all this. And providing its customers with GLP weight loss drugs has been a key growth opportunity that Hims has highlighted in the past. The company has been aiming to generate $6.5 billion in revenue by 2030, and a big part of that is by offering affordable weight loss drugs. That's a big step up from the $1.8 billion the company has generated over the past 4 quarters in sales. Hims & Hers stock is trading at more than 70 times its trailing earnings, and it still has more than doubled in the past year, even despite this recent sell-off. However, I'd be hesitant to invest in a stock that pushes the envelope as aggressively as Hims & Hers does. The company is pursuing growth at all costs, and that has made it a hot stock to own in recent years, but it also makes it vulnerable to various risks, especially related to offering compounded drugs. So what do you think about Hims & Hers stock? Let me know in the comments. And if you like this video, please leave a like and subscribe for more. Thanks for watching.